Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. A 60-day ceasefire between Israel and Hezbollah comes into effect, a first step towards ending a conflict that's killed thousands. The new cabinet takes shape in a sign of his commitment to tariffs. Donald Trump picks Jameson Greer as trade representative and Kevin Hassett for the National Economic Council. Plus, European futures are in the red as Asia drops. That's even after US stocks roared to a 50-second record high for the year. Happy Wednesday. Let's check in on these markets then. It's a mixed picture if you compare what happened overnight in the US versus the Asian session and now European futures. As we said in the headlines, points alert by 0.3%. Two key factors for these markets, at least here and now. It's the geopolitics of the Middle East. It's also, of course, the continuing detail around Trump's picks for the cabinet. We'll bring details for you across this hour, of course, on both of those fronts and more. FTSE 100 futures currently flat here in the UK. S&P futures also flat after that 50-second record high for US stocks yesterday, back above that 6,000 level. Nasdaq 100 futures pointing lower just by 0.1%. Let's flip the boards and look cross-asset. Bit of moves into Treasuries, yields a little bit lower, though we do have some positioning when it comes to the options market, suggesting that some, at least, in the trading community are betting on higher yields in the weeks ahead. Currently 4.23 at the front end on the 2-year, euro-dollar at 1.04. We continue to watch the budget details out of France and pressure on French debt. 1.04 on the single currency and a little bit softer on the Bloomberg dollar index as well. Brent 72.89, just up 0.1%. We look ahead to OPEC plus. That's a factor for the oil markets, as of course is this ceasefire out of the Middle East. Bitcoin below 93,000, currently up 1.3%, but well below those highs that we reached just a week ago or so. Let's get to the Middle East then and what has transpired over the last 24 hours or so, because Israel and Lebanon's Hezbollah have started that 60-day ceasefire. It's now underway after reaching a deal following weeks of US-mediated talks. President Biden says the deal is a major step to ending the conflict in the Middle East.
This is designed to be a permanent cessation of hostilities. What is left of Hezbollah and other terrorist organizations will not be allowed, I emphasize, will not be allowed to threaten the security of Israel again. Over the next 60 days, the Lebanese army and state security forces will deploy and take control of their own territory once again.
OK, let's bring in Dan Williams, joining us live out of Jerusalem for the latest. Dan, is the ceasefire holding? We're in the early stages. And is it likely to be sustained? The implications of this deal?
Good morning. 4 hours into the ceasefire, it appears to be holding. The question is, will it hold for the entire designated 60 days? If it does, to judge by the statements yesterday, it could prove even more protracted. So short of a peace deal, but nonetheless a resolution of at least one front of this multi-front war between Israel and Iranian proxies and Iran itself that's run something like 14 months now. For the time being, it appears to be holding. I think it's worth noting that the 60 days set out as a framework for this deal takes us right into the Trump administration, the handover from the Biden administration. So I think what we'll see is the outgoing administration doing its best to consolidate this, to parlay this into something more protracted, something that might involve the Gaza front and something that might involve Iran itself, although Israel has actually said that one of the reasons it agreed to ceasefire in Lebanon is so it can focus on other fronts, specifically Gaza and Iran, an allusion there to the Iranian nuclear program and potential Israeli military action against it.
Well, Dan, given what Israel has been saying on both of those fronts, how realistic is it to expect that maybe this ceasefire deal between Hezbollah and Israel can be used as a template for the conflict, ending that conflict when it comes to Gaza?
That's an excellent question, and I think there is some reason to be optimistic on that front. Israel said that this deal in Lebanon effectively delinks Hezbollah from Hamas. Those are two tips of the Iranian spear, if you like, in the region. And indeed, Hezbollah joined in this war day after Hamas launched this war in October of last year. And for quite a time, Hezbollah was refusing to cease fire from Lebanon, in Lebanon against Israel, so long as Israel continued its offensive against Hamas in Gaza. It's now clear that that is no longer a Hezbollah condition. And I think the Israelis are hoping that Hamas will feel isolated. Hamas will feel that it's near to being crushed in the Gaza Strip. And as a result, Hamas might be ready to cut a deal through which it would return some, if not all, of the some 100 hostages it's been holding in the Gaza Strip since that attack of October last year. A big question is how Iran will conduct itself. It's clear Iran signed off on Hezbollah ceasing fire from Lebanon. The question is, will it now send signals to Hamas, another proxy, that it indeed should be looking to wrap up the war there and striking some sort of deal with the Israelis through mediators?
Okay, really excellent context on this important ceasefire and the implications for the broader region. Dan Williams, live for us with the detail and the context out of Jerusalem. Dan, thank you. To the oil markets then, the impact there, of course, steady so far this morning as markets weigh that ceasefire between Israel and Hezbollah. Let's get the details in terms of some of the factors feeding into what is moving oil at the moment. Bring in Bloomberg's Anthony Di Paola in Dubai. Anthony, talk to us about the ceasefire impacts on the oil market. We have OPEC Plus this weekend as well, but let's start with the ceasefire and how that's tying in to the broader oil markets.
Yeah, good morning, Tom. Well, we see oil pretty much stable today, so not a huge impact from that ceasefire. That should be something that's kind of a negative for the oil market, takes out some of the risk. But really what we've seen here is that risk premium has already pretty much seeped out of the oil price. So that's why I think that we're not seeing that much reaction to the downward side as that kind of negative, bullish kind of impulse comes out of the market. But really, what's having seemingly a bit more of a stabilizing effect is that OPEC Plus impending decision that you mentioned. We're getting the first indications that the OPEC Plus members are discussing, again, delaying the plan to unroll some of those cuts. So they had been talking about bringing some oil back to the market in January, which was going to potentially bring prices down because we are looking at an amount of oversupply going into next year. But now we understand from sources that the group is talking about, again, delaying that rollback of those cuts also for several months because they're simply seeing the writing on the wall that we do have a lot of supply coming into the market. Demand growth is still sluggish. The supply that we see coming into the market from sources even outside of OPEC Plus already outweighs the forecasted demand growth in the market. So that doesn't really leave much room for OPEC Plus oil to come back in the market. They seem to see that writing on the wall, and they are easing up on that. We saw the Saudi energy minister was in Iraq yesterday talking to the prime minister there. Iraq is one of those countries that is overproducing over its quota, so they want to try to get that in line and get OPEC kind of back on track. Defend that price, probably around $70 a barrel, defend that as a floor, and then move forward into next year, Tom.
Well, it's really interesting you bring up Iraq, because that leads on to my next question, which is about the discipline or lack of discipline within OPEC Plus as they consider delaying again, putting more oil into the markets and reducing these cuts. What is the discipline right now amongst OPEC Plus? How much pressure is there across members at this point?
Yeah, well, the discipline is focused on those kind of three members that are constantly kind of out there, out front, ahead of their quotas. Let's say that's Iraq, Kazakhstan, the UAE, which have been doing some overproduction, as well as Russia at certain times as well. And of course, the Russian energy minister was also there in Baghdad yesterday. The Saudis and the Russians kind of head up that OPEC Plus committee that looks at the quotas. So they were there putting some pressure, even though Russia, as I said itself, oftentimes over its quota. But discipline becomes really important because as OPEC Plus tries to contain any kind of price decreases, they need to control the amount of oil that's on the market. If they're overproducing as a group, that makes it much more difficult for them to maintain and defend that price of about 70 as a floor. Of course, OPEC would like it higher than that, but we are seeing even with those forecasts of oversupply, some analysts saying that it could be even lower. So OPEC is really trying to limit the damage here, and they need that discipline to really hammer that message home, Tom.
Okay, Bloomberg's Anthony DiPaola on these oil markets and some of the key factors playing into them right now. Thank you, Anthony. Let's cross over to Asia right now. Singapore, Avra Hong standing by for a check on the margin, on the markets there. Bit of a divergent picture, Avra. It seems like China's performing quite well, but soggy across the rest of the region.
Yeah, this is something that we saw yesterday as well, that divergence, that mixed bag. Today, we're seeing Asia stocks mostly lower as traders weigh the risk of tariffs. So that's kind of offsetting any easing of Middle East tensions. And the stocks that are underperforming are the ones in Japan, South Korea, Taiwan for another day. China is outperforming, and there is some talk about how the risk from tariffs might heighten the odds of fiscal stimulus in the country. Let's flip the board and take a look at the drags on the region's benchmark, because we're seeing that coming through from the Japanese automaker Toyota as the yen strengthens, but the chip stocks are down. This is what I wanted to highlight, because you talk about geopolitical risk. We're hearing how Trump's pick for the Department of Government Efficiency thinks that the CHIPS Act that a number of these semiconductor makers have benefited from, he thinks that is wasteful. So these are among the drags on the region's benchmark today. Flip the board, take a look at how the yen is faring. It has been quite steadily climbing this week. Indeed, it's at the strongest level against the greenback since 3 weeks ago, which was around the time of the U.S. election. And part of this recent climb is dollar related. We also see a bit of haven bid, but more importantly, the expectations of what we're going to get from the Bank of Japan. Traders have upped their bets for a December rate hike from about 50% earlier in the week to roughly 60% now. And if you look at the early signals about wage hikes next year in Japan, they also look pretty positive. Whether you're weighing out what we're hearing from the largest labor union or the Prime Minister Ishiba, he's renewing pressure on companies to hike wages next year. So all in, it's fueling the expectations of what the central bank in Japan is going to do. That's really what's causing this bullish outlook on the Japanese currency. Tom.
Okay. Avra Hong in Singapore with a deep dive on the Asian markets. Thank you very much indeed. To some of the macro data right now. PCE data due later today, expected to show a pickup in US inflation in October from a year earlier. We know this is a favoured gauge for the Federal Reserve. Talking of which, minutes from the Fed's November meeting showed policymakers preferring a gradual approach to future rate cuts. Let's bring in Bloomberg's Valerie Teitel for the context. Val, what have we been seeing and what do we expect from the data later today?
Just right, Tom. I mean, the attention on those minutes was the repetition of this word gradual. There was a broad support for gradually lowering interest rates. Remember, this policy meeting took place just after they cut 50 basis points. So a bit of pushback in terms of the broad sentiment at the FOMC, saying they don't need to necessarily repeat that steep rate cut, but going for a gradual pace ahead. They also noted that downside risks to growth have eased. They have moderated. That wasn't necessarily surprised, Tom. We did hear that directly from Jerome Powell himself in the press conference. What was a surprise, though, is that they did mention a 5 basis point rate reduction when it comes to the RRP. That would essentially mean that the Fed has their eye on liquidity concerns around the year-end turn. Remember, back at quarter end, the end of September, we did see a funding squeeze happen in front-end interest rates. This clause in the minutes shows that the Fed maybe does have concern on a year-end funding squeeze, and perhaps they could cut the rate on the RRP at the December decision. But the December decision on December 18th is on a knife edge. We're still pricing a 50-50 chance of a cut from the Federal Reserve. We do have a big data dump today, Tom. Notable, a lot of this data is coming today instead of normally on Thursday because of the Thanksgiving Day holiday on Thursday. If you guys flip on, I can maybe talk about the data dump coming tomorrow. There we go. Second quarter GDP we get at 1:30 UK time. We also get durable goods, which is a feeder into this current quarter's GDP reading. Jobless claims, and then finally at 3 o'clock we get the PCE data. Bloomberg Economics warns that a risk of a hot print here could tempt the market to price in a pause at that December meeting. However, when it comes to the equity market, Tom, we really shrugged off the threat of tariffs and closed at another record high when it comes to the stock market. If you flip on, there was something interesting I wanted to point out in the consumer confidence data yesterday, Tom, that optimism around the stock market surged to a record high high. Perhaps this is the Trump 2.0 effect that we're seeing this optimism in the back with the background of tax cuts and tax reductions possibly being extended next year. But it is notable there is a lot of bullishness around the U.S. economy and the U.S. stock market. We looked through those tariff threats yesterday and closed at all-time highs.
Yeah, that bullishness is really interesting, isn't it? Valerie Teitel, thank you very much indeed for a check and breakdown of the FOMC minutes and looking ahead to PCE and GDP data out of the US later today. Let's check in right now on the Israeli shekel. The currency moved high up yesterday on the back of the announcement that there has been this ceasefire deal. It is now underway. The Israeli shekel is now down actually around 0.2% versus the US dollar. So giving up just some of those gains, but we'll continue to monitor this for you. Trading started at 6 a.m. UK time, so it's been trading for about 15 minutes. Let's have a look at what else should be on your agenda this Wednesday, 9:30 a.m. UK time. We're going to get the GfK consumer confidence gauge, so a touch there on the health of the consumer. 1:30 p.m. UK time, meanwhile, it is that GDP print for the third quarter out of the US. It's the second reading. We will break that for you, of course. And then shortly after, at 3 p.m. UK time, it is that core PCE price gauge, year-on-year expected to edge up to around 2.8%, month-on-month around 0.3%. Will it change the directory for the direction for the Federal Reserve in terms of thinking about the next steps around rates? Coming up, US President-elect Donald Trump fills two key posts in his economic team as trade partners react to his tariff threats. More details next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Donald Trump has named two key posts on his economic team. Kevin Hassett is set to direct the National Economic Council, and Jameson Greer is tipped to be the US trade representative. The announcements come a day after, of course, the US president-elect vowed to impose additional tariffs on Canada, Mexico and China. Let's get more in terms of the tariff reaction, how some of the trading partners of the US are adjusting to this, with Bloomberg's Brendan Murray in a moment. But first, I'm joined by Katia Dimitrieva for more on those cabinet picks. So two excellent people to get the context around this evolving story that's going to keep all of us on the edge of our seats, I suspect, for a while. Katia, do these appointments line up then with Trump's tariff talk? There was some expectation that maybe the pick around the Treasury Secretary was going to be market positive, and now we are reminded that Trump is very much wedded to the idea and the policy of tariffs.
Yeah, these two men are both veterans of Trump policy and Trump's White House. It's actually good to see Brendan here as well, because both of us were in D.C. previously where we covered Trump 1.0 and these guys in particular. So it's good to be on air together to talk about it. I think Hassett in particular, you know, he was previously in Trump's White House as the head of the CEA, and he led a lot of the tax cut efforts. Then he came back as a senior advisor to Trump. So very much in the camp of both Trump and Republicans. You know, one of his first jobs in the White House was advising George H.W. Bush. So long experience in D.C. and in the White House. And then in Greer, we have someone who is not Lighthizer. We were expecting, you know, broadly it was expected to be Robert Lighthizer, but it's sort of like a Lighthizer light. This is someone who has long been a student of Lighthizer's. He's sort of seen as a protege, and he was his chief of staff, in fact, during Trump 1.0. So we can expect a lot of the same policies. You know, Trump wasn't kidding. If anyone had any doubts about Trump's intentions when it comes to tax cuts and tariffs, I mean, these two men have previously spearheaded these efforts, and we could see a lot more to come.
Brendan, let's bring you in at this point then. We have to take him seriously. He's not kidding when it comes to these tariff threats. What reaction have we been getting from some of America's key trading partners? I mean, I saw the Canadian response are reporting that they've pledged to do more on the border. I mean, for some, surely, in the incoming Trump administration, that would be grist to the mill, saying, look, these threats work.
Yeah, the responses from Canada and Mexico were quite distinct, actually. Justin Trudeau picked up the phone and called incoming President Trump and said, you know, here's what we're doing on the border. all the problems with migration are coming from Mexico, and the drugs are flowing through Mexico. So the Canadian response was immediate. They put together a so-called war room to respond to Trump. Mexico, on the other hand, sounded fairly tough and said, "Look, if you want to put tariffs on us, you're just hurting your own companies, the auto companies." So you could read into both of those reactions the range of kinds of responses that we're going to see when these threats come down in the future. Some countries are going to say, "Yeah, well, we'll just retaliate against you and hurt your own companies." Others will get on the phone and say, whatever you want us to do, and try to calm Trump's concerns.
Yeah, that divergent and split response is really fascinating, isn't it? The most punitive tariffs, at least being threatened, are targeting China, Brendan. What has the response been from Beijing, if at all, to this?
Well, China typically will respond cautiously in a sort of slow. They won't immediately react with specific tariff level retaliation. So it's been a more slower, deliberative response from China. They say we will take into account what President Trump is saying, and we will engage in discussions and try to come to a solution where both sides win. So it's been a very steady, moderate response from China so far.
Okay. Brendan Murray, thank you very much indeed. Our trade czar, and Bloomberg's Katia Dimitrieva joining us out of Hong Kong to give that context around those picks by Trump, the incoming president, of course, and the implications for the US's trade partners. That story continues, of course, to evolve. We will bring you all the details as we get it. Now, in more news on the US president-elect, Reuters is reporting that Trump's team is considering seeking direct talks with North Korean leader Kim Jong-un. The discussions are said to be fluid. No final decisions have been made. Trump held 3 meetings with Kim during his first term. Earlier this month, Kim said in a speech that past talks with the US merely confirmed Washington's quote, unchallengeable hostility toward Pyongyang. There's plenty more coming up. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now to some other stories making the news today. Dell and HP shares dipped in late trading after both companies reported quarterly results for their PC business that missed estimates and suggest a stall in the market recovery. PC makers had hoped that new machines being touted for their AI capabilities would spur demand. Dell's CFO, Yvonne McGill, says, quote, the PC refresh cycle is pushing into next year. Crowdstrike shares slumped after hours following a weaker than expecting earnings forecast from the cybersecurity company. The numbers disappointed investors, watching for signs the firm had recovered from a flawed update that crashed computers around the world. The outage back in July disrupted industries including air travel, banks and healthcare. Coming up, we're going to speak to the CEO of metals and renewable energy producer Norsk Hydro with their latest strategy update, why they're going to be shelving parts of their business around batteries and recycling, and how firms in the sector, of course, are weighing those potential Trump tariffs, how they are adjusting to that. European futures are currently pointing lower by 0.2%. You can join the top conversations on the energy transition, by the way, at Bloomberg's BNF Summit. Energy, finance and technology converge. You can scan the QR code to sign up and find out more. Plenty more coming up. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. A 60-day ceasefire between Israel and Hezbollah comes into effect. It's a first step towards ending a conflict that's killed thousands. European futures in the red as Asia drops, even after US stocks roared to a 52nd record high for the year. Plus, the new cabinet takes shape in a sign of his commitment to tariffs. Donald Trump picks Jameson Greer as trade representative and Kevin Hassett for the National Economic Council. And those factors are feeding into the markets, of course. Markets weighing up those nominations, those picks by incoming President Donald Trump. And, of course, the Middle East tensions and some easing, of course, with the ceasefire in focus. European futures then lower by 0.3% again after that record high being punched through by the S&P overnight, of course, stateside. We look ahead to data out of the US later today in terms of the PCE number. We know the Fed is focused on that. That's expected to increase by 0.3% month on month. Will it change the directory? Because, of course, the direction. December is a toss-up for the Fed, according to the markets. Will that be adjusted on the back of the data comes out? We're also going to get GDP data out of the US as well later today, which we will be breaking for you. European futures then lower by 0.3. FTSE 100 futures are currently flat. S&P futures also flat after those record gains of yesterday. Nasdaq 100 futures currently just a smidge lower by 0.1%. Let's flip the board and look cross-asset because yields are actually coming in a little lower. Bit of money moving into US Treasuries, maybe some positioning ahead of that data stateside. The US 2-year at the front end currently yielding you 4.23. Euro dollar at 1.04. $72 a barrel on Brent. An OPEC Plus meeting later this weekend. That could be consequential, of course, as well. Bitcoin edging higher in the session today after some losses in recent days. Currently 93,000, up 1.7%. Let's get to the Middle East then right now. A 60-day ceasefire between Israel and Lebanon's Hezbollah is now in effect. Overnight, Iran said it welcomed the deal and reiterated its support for Hezbollah. Meanwhile, Israeli Prime Minister Benjamin Netanyahu said the deal would allow Israel to focus on, quote, the Iranian threat.
I am determined to do whatever it takes to prevent Iran from obtaining nuclear weapons. I have said many times that a good agreement is an agreement that is enforced, and we will enforce it.
For more, let's bring in Horizons Middle East and Africa co-anchor Jumana Pasechi. Jumana, give us the details in terms of the ceasefire. It's now underway. Is it holding? Do we expect it to be sustained? And could this lead to a broader easing of tensions in your region?
Well, Tom, lots of valid questions. I should mention that the ceasefire has only been in effect for 4 hours. So far, it is actually holding, but it is a major step towards the escalation of the conflict and tensions in the region. The heads of state from both the U.S. and France, Presidents Biden and Macron, put out a joint statement yesterday heralding the ceasefire agreement and saying that it paves the way for a, quote, lasting calm in the region. Now, in terms of what this ceasefire deal includes, we know that it is temporary in nature, so it's a 60-day truce, again, with the possibility of being extended so long as the conditions hold. Now, what are the conditions? Number one, Israeli troops are to withdraw gradually from the south over a phased period. Hezbollah fighters and weaponry are also required to move 30 kilometers away from the border. And then the Lebanese army, thousands of Lebanese troops will also be deployed to the area to keep the situation under control alongside UNIFIL and UN peacekeeping troops. And then on top of that, Tom, an international panel headed by the United States will continue to monitor compliance. Now, there is an important caveat here. The Israeli Prime Minister Benjamin Netanyahu, when he was speaking about the ceasefire yesterday, also added that if Hezbollah break the agreement and tries to rearm, we will attack. So this is almost a part of the ceasefire that's separate to the actual terms of the deal that it seems as though Israel were insisting on in order to accept the terms, because if there is a breach, you could actually see a re-escalation of tension once more. So something to bear in mind. So in terms of the longevity longevity of this truce, the monitoring is going to be key. And key also is that Hezbollah doesn't use this as an opportunity to rearm once more, to reestablish a presence in the southern part of the border. And then lots of people, again, are talking about the possibility of rearming through other parts of the country. So the northern border is also in focus because that has been a key entry point for Iranian weapons to enter into Lebanon via Syria as well. So lots of potential flashpoints. That being said, leaders from around the world already are saying that this is a major achievement and a very positive step for the region.
Yeah, one glimmer of hope out of that region, and the first one for quite some time as we continue to watch all those caveats. Horizons Middle East and Africa anchor with all the context. Jemina Pasechi, thank you very much indeed. Switching focus. Norsk Hydro is expected to unveil its plan to accelerate the green aluminium transition at its Capital Markets Day later today. The aluminium producer's 2030 improvement plan sets out its decarbonisation efforts and plans to grow renewable power generation. Very pleased to say, joining me round the desk right now is Norsk Hydro CEO Eivind Kallevik. Eivind, thanks for coming in bright and early to the studio on a big day for you and the team, of course. So this strategy, 2030, it's been underway for a year. You've come through with some details, some announcements. They're going to come through later today. One thing that stood out from the press release that you sent over to us was the phasing out of the battery materials and green hydrogen businesses. You are, in fact, doubling down on recycling. I should make that clear because I think I misstated that earlier. But you are phasing out your battery materials and green hydrogen businesses. Talk to us about why that is.
So for me, strategy is very much about making choices and keeping focus. So we have a very good position when it comes to extrusions, recycling and growing in renewable energy. Then it's really about how do you allocate the capital, where do you keep management focus. And then when we look at the timeline, the risk and the capital needed for developing green hydrogen batteries, that is something that we will then select the way. No question that it will play a role in the future, but we will focus on the core areas of what we know and how to do.
OK. One of the core areas then is still battery recycling. You had a joint venture. You still have a joint venture with Northvolt. That company, of course, facing its own financial problems going into some form of administration. You're looking to raise some long-term financing for that JV. Where are we in that process? How much are you expected to raise?
So correct. So this is a joint venture. We have the majority. This is very close to the recycling business that we do. Same source of battery materials that we use for buying aluminum scrap. And it has a very close tied link to the OEMs like Porsche and Mercedes that we also do business with on the metal side. So there are synergies that we also want to develop. So we built a pilot in Fredrikstad that we want to continue to develop going forward.
Are you getting closer to raising that capital for that joint venture? And how much are you looking to raise?
Yeah, we haven't gone up with a number. The company is well funded as it is, and there's not significant capital needed for that growth story.
OK. You invested, what, about $9 million US in Northvolt, thereabouts, in terms of equivalents. Have you written down that stake?
So we took most of that wrote down in the Q3 results.
OK. Talk to us about the recycling capacity then, because you're doubling down on boosting that capacity at a time when margins have fallen to an all-time low. When do you see margins and that story turning around?
So for me, this hangs very much together with economic activity. So right now, they're squeezed on both sides. So scrap is generated when you have economic activity. People buy new cars, they shred their old cars, people refurbish homes, take out windows and so on. Mm-hmm. Economic activity in Europe and the US is not great at the moment. That will come back as we see interest rates lower. Also hit on the price side, because when people buy less aluminum, also the price goes down in the local markets.
Do you see a recovery in margins for the recycling part of the business next year?
We do expect to see some pickup in 2025. How much and at which point during 2025, I think, is the million-dollar question.
On the flip side, aluminium prices, another key part of the business, those are up. Those have been gaining. Prices are up in aluminium. There's not enough supply meeting demand. That despite all the challenges in China, demand is still there. Is that a story that continues into 2025 to keep a floor under those prices?
The way we see this, the supply-demand balance will be healthy as it goes into 2025, meaning that it will be tight. And a lot of the demand driven in China is really from the green transition. As they keep on building out renewable power, whether it's wind parks, solar parks, that demands quite significant amounts of aluminum in that project. On China, they recently announced they're going to be scrapping a tax rebate for exporters out of that country for aluminium products. Are you seeing an impact as a result of that? Are you seeing consumers, clients in Europe tapping on the shoulder, want to lock in more deals as a result of maybe a reduction
in products coming out of China?
Yeah, so we will see this, and I think it will have several effects. One is that you will see more healthy demand for semis or extrusions or rolled products in Europe and the US, but you will also see LME or the aluminium price go up, which we structurally saw go up roughly $100 immediately after that announcement.
Have you already seen, it kicks in technically in December, have you already seen an impact, a pickup in orders?
So on the metal price, we've seen it already, and then we will see as soon as we pass December 1st on how this is going to work out.
Talk to us about trade and the tariff threat coming through from President-elect Donald Trump. How are you thinking about that? What do you think the impact will be? Across the board, 10% is what's being threatened, much higher on China, potentially even higher as well on Canada and Mexico than that 10%. What do you expect the impact will be of tariffs? They are very likely to come in some shape or form next year on your business.
So I still think it's early days. So he's announced the first ones, as you refer to, of course, and then let's see how much more comes until January 20 and afterwards. I think what's potential is that you will see a change in trade flows, right? So the Canadian metal that typically would go to the US, assuming it stays where it is, the tariffs, will go somewhere else, and then the US needs to attract metal from other places. That will lift what we call the Midwest premium in the US. Our business in the US is very much local business. So we buy our raw materials in the US and we sell our products in the US. So from that perspective, we're a little insulated from the tariff discussion in the US.
Are you putting any mitigation efforts? Are you adjusting anything across the business in expectation of tariffs?
So we are prepared, but I still think it's too early to conclude what the outcome of the tariffs are going to be.
Part of the rationale from Trump and his team is that if we impose tariffs, it's going to force businesses and companies to invest more in the US. Will you be investing more in the US if these tariffs come into place?
So the US is one of the growth areas that we've had for some time. So we've been investing quite heavily in the US. Again, local consumption, local production for sales in the US. The thing with aluminium smelters, which is really then exposed to this, is that it takes time to build. So typically it would take you 4 to 5 to 6 years to build a new smelter. So yes, that will be the result, but you wouldn't see the impact before further down the road.
The auto sector, you supply obviously a lot of materials into the auto sector. We see the challenges on an almost daily basis, and it's largely a global story. What is your expectation in terms of when we see a turnaround, if at all, in terms of this auto sector and the impact on your business? How are you adjusting to that?
So we are exposed in every part of the business that we do, so both on the primary side as well as the extrusion side. We are more exposed to the larger premium EVs and auto producers in Europe in particular, and they are less impacted in that segment than some of the smaller to medium-sized cars, which are more exposed to the Chinese part. Again, the turnaround is hard to say, which quarter, which month, but as the interest rates come down, as there is a continued need for people to replenish or rebuild or get new cars, we will see that at some point. But it's impossible to pin a specific date.
Yeah, of course. But it brings us back to the interest rate conversation, yes. and the need, at least for some parts of this economy, this global economy, to see lower interest rates to spur that demand. Eivind, thank you so much for coming into the studio on the Capital Markets Day, of course, for Norsk Hydro. Eivind Kallevik, who is the CEO of Norsk Hydro, on that 2030 plan and their Capital Markets Day and the opportunities in the months and years ahead and how to adjust to those potential trade headwinds, of course, emanating from the US. Join the top conversations, by the way, on the energy transition at Bloomberg BNEF's summit, where energy, finance and technology converge. You can scan the QR code right now for more details and sign up. Kicks off in Shanghai, interestingly, on December the 3rd. Coming up, markets are nervous about French Prime Minister Michel Barnier's ability to pass a budget and enact spending cuts. We're going to take a look at surging bond risk levels next, getting back to levels we have not seen since the Eurozone debt crisis. A focus on France is coming up. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Unilever CEO Hein Schumacher says the firm left Russia because it was losing control of the business there. In an interview with Bloomberg's Francine Lacroix, he discussed the growing complications of doing business in Russia. He also weighed in on the state of play with ice cream brand Ben & Jerry's.
It was a very difficult decision to make. I found that in my last 1.5 years, it was arguably the most difficult decision to make. But I did make it quite soon, in the sense that I wanted to create optionality for us to exit that market, and that was a tedious process. So it took us more than 12 to 14 months to come to that point that we were able to exit. And at some point in September, I felt I had the optionality on the table, and it was difficult, but I made the decision to go, not because of the war that's going on right now, but because I felt that the control on our business was coming down. I feel that ultimately, if you're a global company, you need to have control of your operations. We need to be able to review results. We need to be able to get the cash out of the country ultimately. We need to be able to make sure that we live up to potentially international sanctions. We need to be able to control our brands and where our brands travel. And that was something that I felt wasn't enough anymore. And I didn't see a window into the near future where we would regain that control. And that drove the decision to exit.
And talk to me about Ben & Jerry's. So the way that Ben & Jerry's was set up was also having an independent board. Will that still be the case going forward, given actually, a lot of the questions that you've just been telling me about?
Yeah. No, Ben & Jerry's has an independent board, and that independent board that looks after the social mission of Ben & Jerry's only. So it's not a board that looks at the business side of Ben & Jerry's, because that's what we do. But it looks after the social mission that's there. That was agreed at the time that Unilever acquired Ben & Jerry's. It's in the merger agreement, and we absolutely respect that merger agreement. And therefore, the new ice cream company that will be demerged will respect that merger agreement.
Okay, Hein Schumacher, CEO of Unilever there. Now, switching focus to France, French bond risks rising to levels last seen during the euro area debt crisis of 2012. This is politicians stand off over the country's budget, or have a standoff over the budget. Here to give us the details in terms of what is unfolding on this front is Bloomberg's Kriti Gupta. Kriti, talk to us about the budget that is being formed right now by French leaders and the Prime Minister. What is the chances that this is going to get across the line? Why is it tied into this market angst? What's going on with the budget?
Yeah, there's so much going on in that. We're really kind of coming at it from the fact that France really has to bring down their debt to GDP ratio. It's gone beyond what it should be by EU rules for a couple of years now, and it's gone to a point where it's very hard to recover from, and that's what Michel Barnier is trying to do here. He's trying to pull it back. He's trying to make some very severe cuts to things like pension reform, to things like subsidies in certain companies, increased taxes in the meantime. France has one of the highest tax rates, the corporate tax rates in all of Europe, so you really want to keep an eye on that as well. So he's trying to push that harder at the same time while trying to innovate and really increase growth within the country as well. The problem is the politics of it all, because of course he's gotten that kind of delay or that extra cushion, the extra wiggle room from the EU Commission and the budget rules there, saying give us time to get this across the finish line. But Marine Le Pen is the one that's kind of calling the shots here. The idea here being that even if Michel Barnier is able to pass this budget through Parliament using kind of a constitutional loophole in mid-December, it could cost him his job with a no confidence vote coming from Marine Le Pen. And it's that kind of nerves, that kind of anxiety about, well, do you pass the budget but then lose the man who's supposed to be bringing stability to the country? It's that's pushing the bond market to these pretty extreme levels.
Well, as you have a particular focus on the plumbing of these markets. What is it telling you about the risks now being priced in to French assets on this?
Well, we're looking at 86 basis points. You have that chart up there that showed about that spread to the German bunds, which is 86 basis points. But just for some context, Italian debt trades to German bunds at about 125 basis points. So you're getting very close. Not far off. And the other side of it is Spain is actually trading closer to German debt than French debt is. And we thought that would kind of slow down for a little bit. We know that a lot of the periphery had their golden moment in the summer with tourism, with their own budget delays. We thought that would kind of catch up to them, and it hasn't yet. But the fact that from a plumbing perspective, French bonds make up more of the debt supply than, say, German bunds, UK debt. It's one of the biggest bond markets. That's where you start to see the systemic risk show up. For now, the EU Commission isn't worried about it, but they might be coming down the road.
Yes, fascinating. There was a great quote from a Japanese asset buyer who had previously bought French debt, to your point, at the end of this Bloomberg piece, saying, you know what, we're looking at Spain and Italy right now. Just to underscore what you've been telling us, Kriti Gupta with the details in terms of the budget angst out of France emanating out of that country. A story we continue, of course, to cross and monitor for you, the importance of that for these markets. Kriti Gupta, of course, of the opening trade. Now, some other stories making news this Wednesday. Stellantis will close a van factory in Luton, north of London, blaming the UK government's electric vehicle mandate. The owner of the Vauxhall brand says it's going to shift production of electric vehicles, electric vans, from its other UK plant in Liverpool. UK rules require 70% of vans to be zero emission by the end of the decade. It's a target Stellantis has described as stringent. And the Financial Times is reporting that China's defense minister, Dong Jun, is being investigated as part of a broader probe into graft in the People's Liberation Army. The paper does not say what kind of corruption allegations Dong is facing. He's the third consecutive serving or former defense minister to be investigated for alleged corruption. A lot more coming up. Stay with us. Live pictures of Shanghai. This is Bloomberg.
I think he can explain very clearly the consequences of not having a good set of policies in terms of what that means for the budget deficit path, the consequences for interest rates, and if interest rates go up, the consequences of interest rates for broader markets, including the stock market. So I think he can, essentially be the voice of reason to make sure that the policy mix is actually intelligent and that the fiscal path the U.S. has put on a more sustainable one.
OK, Bloomberg opinion columnist and former New York Fed President, of course, Bill Dudley, talking to Bloomberg TV right there, of course. Let's bring you a look at how the option markets are actually starting to price in higher yields in the weeks ahead in terms of some of the positioning around some of these calls coming through, suggesting that you could even get back above, in terms of US yields on the 10-year, back above the year-to-date high of 474. It suggests that markets are not necessarily complacent about the risks of an inflationary incoming president-elect, of course, Donald Trump. But before we even get there, we have jobs data out of the US next week, and then, of course, we have the Fed decision on December the 18th. So all of those factors, of course, could tie into what's happening right now. You've got money moving into treasuries today, but in terms of positioning in the options market, suggesting that at least some within the trading community are bracing for a sell-off in US treasuries in the weeks ahead. Let's flip the board and have a look at what to expect from the PCE gauge later today. Month on month, expect to increase 0.3%, year on year 2.8%. Bloomberg Economics says personal income is likely to rise. And in fact, Bloomberg Economics says you will expect to see core PCE inflation increasing this year, and that underscores the view from some amongst the Fed that they have to be cautious on these additional rate cuts. Plenty more coming up, including the CEO of EasyJet. This is Bloomberg.